Sure. Yeah. So let's just get right into it. Desert Gold is a West African regional explorer and developer. Um, we've got two regional scale projects. All told, it's about 740 square kilometers of ground. Um, we've got a flagship project in Western Mali in the Kenyaba Window, which I consider to be the preeminent belt in West Africa, or one of the two preeminent belts. And then we've got a second, earlier stage, albeit still exciting exploration project in Western Côte d'Ivoire in the Tahini Shear. So we've been in West Africa since 2012. I've been the CEO of Desert Gold since 2015. A little high level about management. You can see me here, Jared Scharf. Notable, Diallo Sheikh Guzman is our VP Exploration. He came up through the Barrick Gold Acacia West Africa school. 20 years in the Birimian Greenstone Belt, exploration and development. So we got some very good technical people on our side. At the moment, we've got 360 million shares outstanding. Warrants about 35 million, cash position of about 6.5 million Canadian. And the market cap at 10 cents is about 36 million Canadian, although I saw we were trading, I think, around 12 cents last time I checked. So give or take, the market cap somewhere around 40, 45 million Canadian. Some notable shareholders, Merck Investments would be one of them. Um, Ross Beatty, chairman of Pan American Silver, very well known investor in the resource space. EXM Royalties, management owns a good chunk, and we've got some solid institutional holdings. Although I must say that we got a few new shareholders in the recent financing, and this list has probably changed a little bit. So a lay of the land in terms of where we're at in West Africa. Like I said, the project in Western Mali, which is situated within the Kenyaba Window, it's called the Senegal Mali Shear Zone Project, or the SMSZ project. It's named after the regional shear zone of which it sits on. And that shear zone is structurally controls all the major gold deposits in the belt. And I'll get into that in a little bit more detail. At the moment, the resource is a little over 1.3 million ounces. Um, the system, or all the systems, I should say, are open to depth along strike. There's on echelon targets. There's just so much to go after. It's a target rich environment, to say the least. And I'll get into a little bit more detail on that. We also put out a preliminary economic assessment evaluating the potential to open pit mine some of the oxide resources on the property. That had a positive outcome. I think the internal rate of return at the current gold price is well over 100%, paybacks under 2 years. So we actually have initiated the events for the first phase of construction for the mine. And I'll also get into that in a bit more detail as well. And then the second project in Western Cote d'Ivoire is called Tegba. It's right around 300 square kilometers. We'll probably make that bigger. We're looking at adding some ground in this area for strategic reasons. But this is some historic Newcrest ground. They made a number of major discoveries in the area back in the day. Bonnie Crow, Agua, now Ally Gold, soon to be Zijin after the acquisition that was announced last month. But there's a very nice looking anomaly on the Tegba project that has never been drill tested. It seems poised for new discovery, and we're going to drill test it in the first half of this year. And we're quite excited, even though it's an earlier stage project. Now, this is the Kenyaba Window of Western Mali and Eastern Senegal. And I think this is probably the most important image in the entire presentation. And it really speaks to the gold endowment in this belt. So the darker gray area is Senegal, and the lighter gray is Mali. And the border is demarcated here, and it mostly hugs the Falémé River, which goes right up to the southwestern edge of our property boundary. Our property boundary goes right up to the river, and then Senegal is on the other side. The Senegal Mali Shear Zone here, which is this dashed crosshatch line that goes from north to south for several hundred kilometers, is the major shear zone that structurally controls the major deposits within the belt. There's a secondary shear zone known as the main transcurrent that runs parallel to the Senegal Mali Shear and then dips west into Senegal. The main transcurrent is about a 15 million plus ounce camp, still growing. The camp's still open. Lots of exploration going on, both by the majors doing brownfield and by explorers doing greenfield. But the big structure, the Senegal Mali Shear, this is a 35 plus million ounce camp. It's still open. There are over a half dozen producing major gold mines on the structure as well. There's several producing mines on the main transcurrent. Allied Gold's Sadiola mine. This one up here to the north was Yatella with a little over 3 million ounces. It's been mined out. Sadiola is still going with over 6 million ounces of reserves. And they're doing a lot of brownfield exploration and they're finding more, which is not surprising for this district. There was an acquisition announced last month by Zijin. I believe it was for a little around 5.5 billion cash Canadian. And so we're going to have some new neighbors. Our property package here is in yellow. It's the Senegal Mali Shear Zone package. It's 440 square kilometers of contiguous ground. We border Allied on their southern boundary, and we border Endeavour Mining on their northeastern boundary. We've got 38 kilometers of strike extent of the Senegal Mali Shear Zone and about 12 kilometers of strike extent of the main transcurrent. And we've got a whole bunch of really interesting ground where these structures seem to converge, and we're seeing gold mineralization all over the place. And I'll get into that in a bit more detail. You've got about a 60, 70 kilometer gap of unconsolidated claims. And then you get into Barrick's flagship Loulo-Gounkoto mine, 15 plus million ounces of historic production reserves resources, producing over 700,000 ounces a year here. They're still finding more. The system's still open. It's going to get bigger. Tabakoto Segala, previously Endeavour, now owned privately, 3.3 million ounces. And then south of Barrick is B2's flagship Fekola mine, 6 plus million ounces. The system's still open. They've got another deposit up here, Menankoto, also known as Anaconda. I believe there's over 1 million ounces there, and they're trucking ore to Fekola. Perhaps they're contemplating building a second mill. I think it'll depend a bit on the mining code. On the main transcurrent side, you've got Endeavour's Sabodala Massawa group of mines, a little over 5 million ounces, a ton of exploration going on. They're building a BIOX plant, or they might have already finished it. This was previously Teranga. It was a multi-billion-dollar acquisition. And finally, Resolute's Mako mine, a little over 1 million ounces. So all said, this is a 50 million plus ounce camp. It's open. It's still underexplored. And Desert Gold, for a small company, has an outsized presence in the belt from a land position perspective. So this is a zoomed in plan view of our project, as well as the resource table for the initial resource, where the zones are, grades, and like I said, measured, indicated, inferred, a little over 1.3 million ounces. It's just a maiden resource. It's a certainty it's going to get bigger. The real question is just how big can we make it? There are 4 major mineralized corridors that we're exploring in this area. And to give you a sense of the kind of scale we're talking about, this corridor here, which is known as the Barani corridor, is 27 kilometers. There's a secondary corridor here known as SOA. This is 8 kilometers. There's another corridor here known as Mugiafar. This is almost 20 kilometers. And then there's a 4th corridor known as the Gurbasi corridor that goes on for almost 15 kilometers. Every purple dot you see on this screen is a golden soil anomaly greater than 50 part per billion, going all the way up to 16,000 or 16 grams per ton in a soil sample. Every black star you see is a gold zone that's been confirmed, discovered by drilling. And the white boxes, we presented some highlighted drill intercepts in terms of grade over width, roughly true thickness. And what we're really trying to show you here with this image is the extent of the gold mineralization and the scale of the structures that we're chasing. The larger gold stars are where we have, the larger black stars are where we have mineral resources, pit-constrained resources. And like I said, the systems are open, and we know we can make them bigger. And so we're going to be testing that this year with the drill program. The PEA, as I mentioned, came out about a month and a half, 2 months ago. And the economics look quite good, even at $2,800 gold. It's open pit, free dig, at surface oxide. So we're talking about a very low all-in sustaining cost per ounce. We're going to ramp up over 6 months to 50 tons per hour, or roughly 36,000 tons per month. And we'll do that in two phases. We'll start at 10 tons per hour in our ramp up phase, operate like that roughly for 3 to 4 months. And then we'll add on the secondary circuit and ramp up to 50 tons per hour, or 36,000 tons per month. And under our mining lease, which is fully permitted, that is the maximum throughput we're allowed. And I'll show you where that lease is right here. So the mining lease is here at this rectangular block called Barani East. You can see some of the grades: 12 grams over 45 meters, 7.8 grams over 13, 5.6 over 16. And so in this particular area, we've got a significant amount of oxide resources. The oxide pit goes down well below 100 meters, but we have all these other on echelon oxide targets in the immediate vicinity. We're talking within a couple hundred meters of the starter pit at Barani East. So there is a high degree of likelihood that we're going to add more resources and extend the life of mine and just grow this operation over time. And that's the intention. So I mentioned the four corridors. Well, maybe I'll just touch on the where we're at with the mining just a little bit while we're on the PEA. So, like I said, we initiated after we closed the financing. We just raised $7.2 million Canadian. The first phase of the build is give or take roughly 1.7 million US. We've already put the deposit on the plant and equipment. The water borehole drilling is going to start this week. Pre-stripping at site will start. Earthwork activities, everything's going to be starting here this month. General idea of the site layout. Again, this is a relatively small operation, and the objective is to be producing by June. And it's a simple gravity plant. And what we'll do is we'll stockpile the treated ore with the idea of potentially reprocessing it if we do build a CIL, a small footprint CIL on the back end of this process, perhaps in year two, to get the gold recoveries up from 68% with the gravity up to roughly 90% with the CIL. In terms of timelines, the plant and equipment will come from China, make its way to the port in Dakar, Senegal, and then now this is better to give you a sense. So the conservative delivery date for the plant and equipment is May 17th. This is kind of a worst case scenario. In reality, we're expecting the plant to arrive closer to the beginning of May. Once the plant has arrived, assuming all site preparations are completed by that time, it'll take roughly 3 weeks to install and commission the plant. So like I said, we're targeting first processing of ore in June of this year. Yeah. So anyways, the first phase, the mining, will be fully funded by the equity we raised. And then we will spend a little bit of money on drilling some of the more important targets in Mali. And this is with the slide. I wanted to just sort of reiterate these points. Here are the major mineralized corridors. Like I said, the big one is Barani Menankoto, nearly 27 kilometers of continuous surface mineralization. Obviously, we have gaps in the data where we don't have drilling or we have partial drilling. But we've encountered economic grades over width in the drilling virtually all over this area. And so the exploration in Mali this year will be a combination of resource expansion, where we see obvious opportunities to chase zones either along strike or down plunge or to depth. And as well, we'll be doing some step out, which we usually do with Aircore or sometimes RC if there's not saprolite. And really, we'll be drilling high tenor auger anomalies, golden soil anomalies, geophysical targets that are on trend or on echelon to existing gold zones, where we feel we have a high degree of likelihood of finding new on echelon gold zones. And we're talking about material step outs. We want to add. We're not looking to add 5,000-10,000 ounces at a time. These are big systems, they're big structures we're chasing, and we're looking to make material impact with the drilling that we'll be doing. So the drilling will be focused along some of these trends here: Barani to Soa, Mugiafara, where we have 450,000 ounces, but it sits within a much larger area of mineralization. And then here at Gorbasi West, West North, where we have a zone that's over, well, roughly 100 meters true thickness from surface, and it's open. It's open to the north, and it's open to depth. And we plan on stepping out and drilling some significantly deeper holes there. Because even though the grades are a little bit lower at around a gram on this area, the zone is quite wide. And so there's potentially a volume story here. And so we're going to be testing with the drilling here. So those will be the areas of focus in Mali. And then in Côte d'Ivoire, we got a new project in April of 2025 that we're quite excited about. It's earlier stage, but like I said, there's a very compelling anomaly that sits on it that was discovered by Newcrest but never drill tested, which we couldn't quite believe. So this is the sort of regional setting of Côte d'Ivoire in the Birimian. This is our project here, Tegba, roughly 300 square kilometers. It sits directly on the Tahini Shear Zone, which is related to Lafigué, Bonikro, Yaouré, Agua. And this whole part of Côte d'Ivoire here is heavily underexplored and seems to be poised for material new discovery. And that's why, when we were evaluating the country and looking at, dozens of projects, thousands of square kilometers of licenses, we really honed in on this area, and in particular on Tegba. So this just zooms in a little more closely at the regional setting. It should be noted that Allied Gold is our neighbor both in Mali and in Ivory Coast, and that is soon going to be Zijin. So they're our neighbor in both countries, which is, I think, noteworthy. Bonikro Hire, multi-million ounce. The mines are quite mature. They've been around for a while. I think any new discovery in this belt there'll be a lot of notice will be taken quite seriously. If even if 500,000 or 1,000,000 ounces is found in this belt, given the need for feed to some of these more mature mines, it could make things quite interesting. Thor Resources is here with their Guitry project. They're doing drilling. I think they might be coming out with results fairly soon. We'll see how that goes. This is Tegba here. This is the Tahini Shear Zone. It's similar to Mali in the sense that these gold deposits, they tend to be structurally controlled, and they tend to be situated proximal to these major structures or proximal to parallel structures that sit within the area. These purple dots is where the Newcrest anomaly is, and we'll just zoom in a little bit on that. So this is the Newcrest anomaly. I'm just going to zoom in a little bit so you can potentially see. This anomaly is roughly a little over 4 kilometers long by nearly 2 kilometers wide. It started off with wide-spaced soil geochemistry. And then, as you can see, as Newcrest sort of got some love in the soil geochemistry, they started to infill. And in fact, they delineated some really nice looking anomalies. And what you want when you're looking at anomalies is you want some coherence in the data, and you want some continuity. In other words, you want more than just one anomaly. You want, a succession of anomalies. So what you're looking here is roughly 50-meter spacing, and you can see, a dozen anomalies in a row, and they've really delineated a clear outline of some type of gold system at surface. And when we did our due diligence on this project, we went and stood on the anomalies, spent a couple of weeks out at site, and formed an opinion quite quickly that this anomaly was real, that it was in place, or as we say, in situ. It's not as a result of transported material or anything like that. There was outcrop. There's plenty to see. So we're going to be doing a geophysical survey over this area this month, in the month of March. And once we get the geophysical survey done, we'll go straight away with air core fences. And you can see the blue dots here. This is where we have planned the air core fences. Depending on the results of the geophysical survey, the fences, they might change a little bit. But the the method will be the same, which is to drill across the main part of these anomalies. And some of these anomalies, like if you look at the western area, this is roughly 500 meters wide. I mean, there's potentially the opportunity for major, it's a big anomaly. So we got to drill test it, but we're pretty excited about this. And then as for the rest of the permit, well, 85% of it's never been explored. Not seen any prospecting whatsoever. So we'll have our geological team spend time on the remainder of the property, just gradually working up additional targets. And you can see that there's a gap in this license. We're working on filling that gap, and hopefully we'll have something to talk to the market about that, in the first half of this year. So the Tigba story, a little earlier stage, but very compelling. And then for Mali, it's a more advanced project, tons of targets to chase to both grow resources and to make new discoveries. And our plan is to get the gravity plant into production before the end of the first half of this year, and get some cash flow going. And we'll use the cash flow to fund exploration, and it'll free us up to do a lot more things, and not be beholden to the capital markets, and stop all the dilution and money raising. That's the goal. So that's kind of the story in a nutshell.
Well, Jared, I mean, that's quite the story to have. And like I said, too, when coming off the back end of South Africa at the Indaba conference, you could definitely see the strength and the momentum building over in the African continent in the most untouched, resourceful continent. And it's great to see that it's really stepping into the spotlight and taking its moment like that. So thank you so much for sharing this. There are a couple questions that came in. The
Okay.
first one being, what gold content is needed for commercial mining in G&T?
G&T.
I'm not even sure what that means. So if
Are they asking like cutoff grade for open pit mining in West Africa?
perhaps
Um,
that's
yeah, I mean, I think if your average head grade at $2,500 gold, people were looking at a gram per ton. I'm sure you'll see more marginal projects maybe try to get pushed. But for us, internally, a gram per ton for open pit, assuming your metallurgy checks out, is economic in this part of the world for sure.
okay. So let's flip over then actually to central banks because they are accumulating aggressively. We see it. So why should institutional capital look to Desert Gold now instead of waiting for consolidation to dictate value?
Waiting for consolidation to dictate value. Well, I mean, I think it's about your level of how you want to speculate, and there's a lot more liquidity flowing around, and typically that's when consolidation starts to happen. And I mean, you just saw it with our neighbors. If you look at the
Absolutely.
history of the belt and the Kenieba window, there's been a half dozen, billion-dollar plus transactions over the last 12, 15 years. Endeavor buying Teranga, B2 buying Papillon, Barrick buying Randgold, and now Zijing buying Allied. I mean, whenever any company finds something compelling in this district, they don't tend to last very long.
This is true. And actually, that's one of the
Endeavor
things that
Mining buying Avian for Tabakoto,
that's
Endeavor
it.
buying Avnil. I mean, the list just goes on and on in this area.
That's one of the things that you and I spoke about on your last time you were on the podcast too, was the M&As coming out and to really watch out for those. So you called it before it even started hitting the market. Great job on that one.
Yeah. Well, I
So
think
also,
sorry, I was just going to say, I think the majors, mid-tiers, the producers have really focused on their own operations for at least over a decade. And so some of
mhm,
them are probably perhaps a little bit behind the exploration curve. And
yeah,
most of the time, it's just easier to use your balance sheet to buy discoveries than to go out there and make new ones.
fair
So
enough.
I think that's what you're going to continue to see.
So what about right now? So in a market where majors are, as you said, hunting scale, are you going to be acquired or building to negotiate from strength here?
As an exploration company, the work we have to do is identical. So
Okay.
our objective is to build scale, um, because that's how you make a large mine profitable, is to build volume and tonnage, and that's exactly what the majors want anyway. So
Right.
the strategy on the ground from an exploration perspective is identical. And
Right.
if you build something that's compelling enough, that you get an offer, well, that's up for the shareholders to decide, right? Management can make their recommendation, but ultimately it's for the shareholders to decide. The work we have to do from a drilling and development perspective is the same.
Yeah. So if we push that a little bit further, then gold cycles, they reward scale and they punish hesitation. What are you doing right now that proves you are ahead of this move, not reacting to it?
Well, we're just going to be drilling all of our best targets. It's
Amazing.
pretty simple. Yeah, yeah. We're just we're fully funded and we're going to be drilling. And that's the truth serum right there, right? Is the drill.
Yeah.
So we've got, and maybe just one other element to expand on that is one thing investors should look for in exploration companies is optionality. And, Desert Gold has 30 plus targets for really large mineralized corridors they can chase. So we've got optionality from an exploration perspective. We're not just chasing one target.
That's great. That's great to hear. And that's what I was, so that's one of the things I was going to ask you was what's one thing that you think that investors and probably, the market is still misunderstanding about Desert Gold?
I'm not sure about misunderstanding, but perhaps there over the last several years for Desert Gold and maybe some of our peers as well is
Mm,
there's been an overestimation of the geopolitical risk in Mali.
totally.
And you've seen it in the valuations of the explorers, and of the producers and developers as well. And I
Mhm.
think there's a lot of opportunity there, because a lot of other companies have seen massive run-ups in their valuations and their assets aren't as good. So maybe there's a little bit of a misunderstanding there where the market's overreacted. And I think that
Sure.
Mali is very much on a better track than it was even a year ago.
Amazing. Amazing. Okay, so last question. What's your website and your tickers? Where can we all find you?
The website is desertgold.ca, and our ticker is um, DAU in Canada, DAUGF in the US, and QXR2 in Frankfurt. I have a sheet here somewhere.
I know it's at the
But
bottom right of each of your slides there too. So
yeah,
that's a good start, but definitely head over to their website, desertgold.ca. Learn about their story. There's a lot going on over there. Thank you so much, Jared, for all of your insights. I am intrigued to learn more just about Africa as a whole and especially about Desert Gold. So thank you again.
you're very welcome. Thanks for having me, Lindsay.